Hi, I'm going to demonstrate problem 1-5, which is in your textbook on page 28, and the first question in the Chapter 1 practice problems in Connect. After I finish, you can try M1-6 in the Chapter 1 practice problems in Connect as well. In this problem, we have to determine whether the items given to us represent assets, liabilities, stockholders' equity, revenues, or expense account types. We're going to do that first, and then we'll come back after reviewing the formula for the statements to determine which financial statement they belong on. So let's do a quick review of what they are. Assets are economic resources that are expected to provide a future benefit to the company. Liabilities are debts of the corporation, amounts owed to creditors. Sometimes we see the word payable associated with them. In fact, most times we see the word payable associated with them. Stockholders' equity represents the financing provided by the owners of the company, the stockholders, and also the accumulated earnings from the operation of the business. It's the amount of the company that's owned by the owners or investors. Revenues represent the amounts earned by the sale of goods or services to customers. And expenses are all costs of doing business that are necessary to generate those revenues. Expenses benefit the current period. They're used up resources. Okay, so let's start with accounts receivable. The word accounts means on credit. Receivable means that the money is going to be received from customers in the future. So this must have been a sale of goods or services on credit. This is an economic resource that is expected to prevent a benefit in the future, hopefully cash from your customers. So we'll consider this an asset. Sales revenue. This is nice because it's got the word revenue in there, so it's pretty easy to determine what account type it is. It's a revenue. Equipment represents a resource that you're going to be able to use to help you run your business. An economic resource that's going to provide a future benefit is an asset. Expenses, for the most part, are pretty easy to determine because they often have the word expense in them, like this one, supplies expense. Supplies expense is where we put supplies that were used up during the period. So the account type is expense. Cash is an economic resource owned by the company. We're going to use it. It's going to provide us a benefit in the future. That's an asset. Advertising expense, again, we've got that word expense in there, so we can choose our account type as an expense. The advertising expense account is where we put the costs for advertising during the current period. Accounts payable. Again, we have that word accounts, which means on credit. The word payable is a clue that this is a debt or a liability. Now, it's easy to get accounts payable and accounts receivable confused. Accounts means on credit. Accounts payable means we have to pay it in the future. It's a debt or liability. Accounts receivable means we're going to receive it in the future. It's an asset. So accounts payable is a liability. And finally, retained earnings. This is the amount of net income or earnings that we have retained or kept inside the business. It's a type of stockholders' equity account. There we go. Okay, now let's talk about the statements. By statement, they mean that they want us to determine if the items belong on the balance sheet or income statement. The income statement formula is revenues minus expenses equals net income if the revenues are larger and net loss if the expenses are larger. The income statement covers a specific period of time and is an indication of whether the operations of the business have been successful. So revenues and expenses go on the income statement. So let's see which ones we have here. Here's a revenue. That's going to go on the income statement. Supplies expense goes on the income statement. Advertising expense goes on the income statement. Only revenues and expenses go on the income statement. The balance sheet formula is assets equal liabilities plus owner's equity. So anything that's an asset, a liability, or stockholders' equity goes on the balance sheet. The balance sheet formula is the accounting equation. Now, while we're here, I want to show you a few things about Connect. First of all, there's this little link at the bottom here called Check My Work. Oops, that one didn't get recorded. Let's click on Check My Work. We're allowed to use it 3 times per question. And it basically tells you whether what you've done is correct or not, and we did everything correctly, and it is complete. However, bear in mind that Check My Work does not tell you if you've missed anything. It only tells you whether what you've done so far is correct. If it marks your work as non-correct, it doesn't give you the answer. You would have to go back and figure out the answer. You can have a link, use this link here to the ebook to read about the section that deals with this problem here, just to be able to get a little bit of an idea how to answer that. Also, there is often a link here as well, next to Check My Work, called Hint. And if that is available, it will help you solve the problem. It will give you something similar to use as a reference. Okay, now it's your turn. You can go to the Chapter 1 Practice Problems and Connect and try the second question, M1-6. Thanks for joining us.